Hey guys, welcome back to the podcast, the Capital GPT podcast with your host Jared. And I do today we have Davron Chanderdeo. Hope I said that right. Yeah, he's joining us and basically he has a financial background and he does amazing content on TikTok, on Instagram where he talks about investing, he talks about everything finance. He has over 100,000 followers across all his platforms. Thank you for so much for joining us.
Hey man, Jared, appreciate your time and thank you for getting me on your podcast as well. Amazing things that you're doing for the South African community.
No, I appreciate it. I appreciate it. Um, Is there anything I left out in your description? Anything you wanna tell us that could give us more background as to you?
Just chartered accountant, business owner. So it's pretty much that's sums it up in a
Yeah,
nutshell. But just focusing more on giving back to the community through my financial platforms.
nice, nice. Let's talk about
Yeah.
you being a chartered accountant. So, you being a chartered accountant, being in that space, do you see that benefiting you a lot when it comes to creating financial content? Do you see that makes an impact?
Yeah, man, massively.
Mm.
Not just in terms of like just knowledge,
Yeah,
but in how I learn to like simplify the concepts and the complexity of, financial concepts. I think most CAs just get taught, theory all the time. But
yeah,
what we don't really realize is how to interpret things like financial statements,
mm,
understanding complex tax structures, which most people just don't understand.
yeah,
And probably like analyzing risk as well. So I think that part of being a CA has helped me tremendously in just giving back to or
mm,
creating my content every single day.
yeah. Um,
Yeah.
I do somewhat create financial content, right? Not as in depth and in depth as you, but I give the basics because most people don't really know the basics, right? And I think that in itself there's a need. Um, how do you find creating content where you know um there's a certain demographic or a certain thing that you can create content and you know that you're going to get views, and then you have the educational part. How do you balance the education versus let's get views?
As a, that one there is something you got to think about. But
100%.
at the day, as a content creator, right? And that being maybe your passion project or like your
Mm,
side hustle or whatever you want to call it, you've
yeah,
got to figure out what's your actual like purpose in doing this and what's your niche in doing this. Social media today is so strange. There's so many content creators out there. There's so much of content to actually just consume. And I myself personally, I just focus on education.
you're right.
I never started my channel anything specifically other than just educating people. And yes, building my business came, which was amazing. It came on by growing my content. But my main focus was, hey, educate people, show them that, hey, there's a way to be financially literate. Um, Show them that there's a way to become financially free in
Mm,
a specific time period and change people's mindsets. But I think I just focused on education and somehow people love education, okay,
yeah,
because they want to learn more. And entertainment, cool. It's cool. It can get you so far.
yeah,
It's,
it's
I mean,
100.
doing a few trends and few skits, that's fine. It's cool. Like it
Mm,
adds to your channel, adds to your persona, adds to your brand, if you would like to call
yeah,
it. But I mean, you specifically, if we look at your stuff, like you specifically were doing education as well,
mm,
Uh, so the primary focus, 90% of your content would be education-based
yeah,
content.
yeah, 100%.
Yeah.
You have that 10%. That's okay. Let's do something else. So let your personality shine through. So no, that
Yeah.
makes sense. That makes sense. You mentioned a business. What is that business that you currently working on? Oh,
So
right,
I have my own chartered accounting practice.
right.
So been doing that since COVID, it's about 2020.
Mm,
And yeah, when I transitioned into social media or started doing social media, a lot of leads came from there where people were like, hey man, do you do people's tax returns or do you do accounting for small businesses or do you do audits and stuff like that? And by natural default,
yes.
I just email me and we'll see how we can work together. But that's pretty much how. But the business wasn't started on social media. That's the funny
Yes.
thing. It's offline.
Yeah.
And I always tell people building a business offline is so hard
Yeah.
versus building a business online because when I started building the business offline, it was purely meeting people in person, networking, asking people for leads, asking people for referrals, picking up the phone and making phone calls to
Yeah.
people you don't. So now we shifted into a whole new realm,
Mhm.
and it's just unbelievable.
100%. Uh,
Yeah.
So I also delve into digital marketing, right? So I've been digital marketing for about 5, 6 years. And what you see is that there's so much of brilliant businesses out there, but they don't have the eyes on them. And that's where putting yourself out there, whether it's a personal brand or your business as a whole, putting it out there, you'll see you're gonna get leads, you're gonna get generation, and we miss out on a whole different market because we trying to be conservative. And there's a bunch of holdheads, if I should say, that doesn't look to go and look to the future. They're stuck on where they're at and they're fine with it. So well into you on adapting to the market, to what is trending. Um, on the other side of what is trending, right? It's just a question that come up. Like, have you
Hmm.
seen AI involved with finance? Have you seen something like that?
Yes, I've seen so many people say AI is going to take over and be the accountant or be the
Mm,
consultant. And yes, it's helped tremendously in that space. I think like back when we were having to process manual stuff. Like if you're a client of mine and you give me your bank statements, that's something we got to manually process into a system, right? Now, yes, there's softwares where they pull this, they extract it straight into a software, and you still got to allocate it manually. Although there is a little bit of automation there, but I've seen recently that there are, but it's more in the US, right, where they've created this tech where you just throw in the bank statement and it allocates it for you within a matter of 5 minutes. So what used to take us a day, 2 days, 3 days to do, if not a week,
yeah.
is now 5 minutes to do with AI. But how accurate it is, how reliable it
Mm,
is something that's probably going to take a few years to actually adapt to,
yeah.
right? So I think the adaptation process is also something that we've got to look at. A lot of people still stuck in their ways, don't want to move, into the AI space, and they're happy to be where they are. Like you're saying, in the digital marketing space, people don't want to transform, digitally transform.
Mhm.
Um, so you you are right in saying there are some sort of AI features that are coming into play into the finance industry a lot more, right? But will it take away from current business I would say in the next 5 years?
Yeah.
Probably not. Maybe in the next 10 years, yes, but not in the near 5 years time.
Yeah, and so I work with a software company, right? And basically, what I've learned about AI as a whole is that what we should do with AI is not like divorce it completely, but then know that AI is for you to collaborate with. So it's not taking over completely, but it's like, listen, if you could extract something small from here, it's saving you a couple
Mm.
of days of work. So it's not particularly, it's doing the whole job for you, but it's making your job easier. And I think that's what people miss it, especially business owners are like, oh, we could replace a whole employee and just have AI do it. Where it's like, no, the AI could make mistakes, and that's where you have the person to collaborate and manage that. So yeah, I think that'll be in every aspect.
I
Um,
think it's more like a tool. I think if people
exactly,
think of it like a tool, it'll be much better than an actual employee.
exactly.
Yeah.
I follow your content, enjoy your content. You post a lot
Cheers.
about tax-free saving, investments, um, a lot about the just averaging into the S&P 500. What's your take on the S&P 500 versus the JSE Top 40? Do you dwell into that? Because obviously there's tax-free savings in that, right? So what's your take on both of them? Do you invest in both of them, or do you go, let's just focus on one?
So are we talking tax-free savings or actual investing?
Let's go actually investing, right? We can
Actual investing.
come back to tax-free. Yeah.
So, for me, for myself personally, I do both,
Yeah.
right? The reason I do both is specifically I want to diversify
Mm,
my holdings, if I would call it a holding, but my investments. I'd like to diversify my investments. So the S&P 500, it's averaged about 12 to 15% in the last 10 years,
mm,
right? So you're going to get years where you -5, -10%, but then you're going to get years like in the last few years where you positive 20%, return of investment.
100%.
So you're actually diversifying outside of South Africa. And then the JSE Top 40 is probably the bare minimum you should be in.
Mm,
Like if you're looking at ETF out there, the JSE Top 40
right.
is one that you have to be in. One, the growth is great. It's consistent over the last 10 years as well, but it also pays you dividends,
Mm,
right? And I don't think people really understand that you do this for the next 20, 30 years, and you'll have a very nice, significant portfolio built up.
yeah.
But what you really want is the dividend that gets paid to you every quarter from these funds. So I think having a mix of both, I allocate them exactly the same.
Yeah.
I don't go S&P 500, NASDAQ more than the JSE Top 40. Mine is allocated based on risk, right? So if I'm, excuse me, so if I'm allocating a specific amount per month, I'm basically doing equal allocations to them.
Okay, nice. I didn't know the JSC Top 40 gives you dividend. I didn't know that. So
Yeah.
that's good to know, good information to know. Do you also invest into like stocks as a whole? Like just I'm gonna buy Tesla or buy Nvidia. Do you then just solely focus on the ETFs?
So majority of my portfolio is ETFs,
Right.
right? Um, you've got to change your mindset and be like, hey, my investing strategy to retire early is going to be ETFs.
Mm,
My investing strategy to double my capital or triple my capital in the next 2, 3 years is buying or stock picking, right? Or specific stocks that you're going to pick. You can get them completely wrong if you don't know what you're doing, if you don't know what you're looking for, if you
100%.
don't understand the company, the financial statements, whether it's undervalued, overvalued, whether the director or the chief financial officer or the CEO moves to a new company,
Yes.
then the whole company's dynamic changes, right? So yes, I do pick specific stocks in my portfolio, but they're not there for more than 5, 10 years. They're not going to be there the next five,
Yeah.
10 years because you've got to keep evaluating them over and over. If you look at the JSE Top 40 and you pick specific stocks on the JSE Top 40, that's cool. You can build nice positions. Let's call it Standard Bank, First Rand Bank. Those are, your great banks.
Yeah.
They're going to be new dividends, growth with growth every single year. But if you look at international stocks, I always say to people, it's like, if you look at the S&P 500, I don't know the actual numbers like offhand, but the S&P 500 is 500 companies, right?
Yes.
It's a basket of 500 companies. But the market cap, the actual weighting of the S&P 500, 90% is the top 10 companies, which is
Yeah.
like Amazon, Microsoft, Tesla, Facebook, Google. So if you're going to stock pick, and if you're going to buy the S&P 500, why are you doing the same things? Just buy the ETF,
Yeah.
and if Tesla has a bad news and what is going on right now in the world has huge downside to it, you won't be affected in the S&P 500 because they'll rebalance the portfolio for you, right?
Yeah.
But you look at buying Tesla on its own, then you have the huge risk of downside movement.
Yeah. No,
Yeah.
I think that's perfectly explained. Um, I had Ivan Sambo on the podcast prior to this. He does financial content as well. And I spoke about it because I was like, I genuinely just focus on the US stocks, not South African stocks. And he was along the same lines as you. And he was like, also the thing of the South African stocks is that when big news happening in the US or wars or whatever, it doesn't affect the South African stocks at all. So you basically securing yourself in it. Plus, the South African stocks is again tax-free savings. Like not all of them, but obviously, like having the JC Top 40, you have a certain limit, right? What is that limit as well? I think
Oh,
Um,
so for TFSA,
mm,
so yeah, so for TFSA, it's 36,000 Rand per year, and
right.
then it's 500,000 Rand for your entire life.
Wow.
But you've got to pick which fund you want to allocate yourself to.
Right.
Uh, so you can pick global funds, local funds. It's all, it just has to be 36,000 for the year.
Mm, yeah. Okay.
Yeah.
Um, so I've recently so I dwell into investing, trading as well, right? And not sure like as your background in trading, but I'm sure you have knowledge. Um, so I've seen that there's a correlation between sort of poker, blackjack, and chess, right? And I've seen
Mm.
there's a correlation between like the hedge fund, like CEOs and big time players in the investing space. They're very good at blackjack, poker, or chess, right? And do you see a correlation between investing? Because I'm sure you are very much investing and trading. Do you see the
Yeah.
correlation between it, or do you participate in any of these, like poker, blackjack, or chess?
Look, I think all three require one thing. It's decision making under
Yeah.
uncertainty. Okay. So when you look at it and you break it down, decision making under pure uncertainty is what
Mm,
all three have in common, right?
yeah.
And for me personally, I don't gamble. I don't step
Yeah.
into a casino
No,
and
same,
gamble
same.
and stuff like that. So I pretty much look at investing like chess. You need to know the rules, but also you need to know your opponent is or who your opponent is. And
Mm,
in chess, your opponent is kind of like your own self or your own fear. And when you break it down, it's just your greed and ego.
yeah.
Um, People lose money not because of bad markets.
Mm,
They lose money because of bad reactions to the market.
yeah.
And how they react is when they lose money. Um, so when you look at it in terms of investing, I'd say it's more like chess
Yeah.
versus poker or blackjack, just purely because I don't play poker. I
Yeah, yeah,
don't
yeah,
play
yeah. For
so I
sure.
don't really know how to actually strategically use it
Yes.
in the real world. But in the terms of chess, I've played chess. I know how to play chess. And yeah, it works in that way.
Yeah. I'm similar along the lines. I don't gamble and stuff, but I'm very much on chess.com almost every day. And the thing is, like you said, it's very strategic. You have to know what you're doing. Um, and you also got to plan your next move in advance, right? So I think that's a similar thing with investing. Um, you said very much it's you against you. And I think when it comes to investing, there's a greed aspect, right? And I've had this problem where I was up maybe if when I was leveraging like stock trading, right? I was up like 100% because it was like there's a lot I usually do earnings trading, right? So
Yeah.
I was up like maybe 50%, 100%. I was like, okay, cool, it's going to continue to go up. And then you just see it. And it's the greed aspect, right? Where it's like you are up 100%. You've never had that X amount before. Now you're going and you're saying, no, I'm just going to go up more. And it's like, what are you actually doing? And it's a different case when it comes to like leverage trading where compared to like averaging into the S&P 500 or the GSE top 40 because that you're holding for the
Yeah.
long run. But when it comes to stock trading, you can't be greedy. Like if you see profit, like and you know it's a certain, you have to take it uh, and you spot on that. um, sure. Have you had experience in leverage trading or stock or trading in general outside of the investing
Yeah.
space? Yeah,
Trading in
it's like
general, forex trading, crypto trading, all of that, leverage trading. That is a completely different
different
ballgame.
market.
That is different, requires a different discipline, requires a different plan, requires different capital. It is not the same thing. And when
Yeah.
people put it together, I'm like, no, it's not the same thing. Yes, I'll be able to read a chart on
Yes.
Bitcoin and invest into Bitcoin based on how I can analyze a chart and when to buy. And the same with, call it NASPERS stock. I
Mm.
use technical analysis to
Yeah.
understand when I'm buying NASPERS or averaging into NASPERS a little bit more.
Yes.
With the S&P 500, you use your trading skill in your investing platforms, and then you kind of figure out, okay, S&P 500 just dropped 20%.
Yeah,
It hasn't dropped to a certain level, maybe it's a support level, whatever, key level. You
for sure.
buy off that level, you invest a lot more. And even if it drops further, you're investing. You
Yeah,
know you bought that at a good price already for the
exactly.
next 5 years or 10 years or 20 years versus trying to leverage this thing
Yeah,
in
yeah, yeah.
in such
That's
a short period of time.
and you out.
Yeah, and it drops further and then you're out. You get margin called.
Exactly.
So trust me, I understand.
Yeah. If anyone out there, it's not worth it. If you're getting started in margin calling and leveraging, don't leverage. Learn from my mistakes. I think as you do go deeper into it, like you gotta have a balanced portfolio, right? So you have your majority of your investments into ETFs. But if you want to have like a 10% or 15-20% that's going into your individual stocks or your leverage trading, then I think that's more. Yeah. What's your thoughts on that?
I mean, that's your own plan. That's based on your income that you have. So
Yeah.
it's based on your disposable income. So if you have, I always believe 15% of your gross income needs to be invested, right?
Mm,
That is rule of thumb, 15% invested into the stock market. But how you invest it is all up to you. You
yes.
can take 10% and put it away into your ETFs, into your bonds, into
Mm,
whatever you want, which is long term. And then if you want to put 5% away into something a little bit more riskier, take a chance, make short-term gains. I always believe that what I do personally is I take a percentage and I put it into short-term plays,
mm,
right? Double my money, um, I move that into the S&P 500.
yeah.
So double my money, I'll move it into the JSE top 40. I'm
Nice.
not withdrawing it. I don't need to live off the money. It's not, that purpose is not for it.
Yeah.
It's speculative trading
Yeah.
versus investing,
Yeah.
right? So for example, we used, I mean, I'm sure you follow me on social media, but
Yeah.
in April, I think it was April last year, we buy cars, okay, which is a
Yeah.
stock,
Yeah. I remember that. Yeah.
speculative stock, right? Gone up 150, 200% today. Okay. I think we sold it off at 120, 130% growth. And I moved everything into the JSE top 40 and
Yeah.
the property. And so you got to look at it and be like, hey, what's my strategy here? If this thing goes to zero,
Mm,
I lose money, but it's not all my money that I'm investing in.
exactly. Exactly.
Yeah.
Um, I think there's people out there, right? And I think we also catering to South African market. There's people out there that don't make a lot of money, right? And they want to get started in investing. What advice would you give to them?
Start. I mean, what's not a lot of money? Because I mean, on easy equities, I think you can start with like 50 rand.
Yeah.
So, and look, it's all relative.
Mm,
What's a lot of money, what's not a lot of money for the person in South Africa today.
yeah.
So the platforms are there, okay? The fees are super low. And
Mm,
that's why these platforms work, is because now we don't have to go to these wealth funds where it used to be only the rich that
yeah.
could go to it. Now they're giving us the platform and they're like, hey, you can buy a stock for a fractional stock. You don't have to buy the whole stock. You can buy a fractional stock and still have exposure to the market. So my advice is just get started. Just start with as little bit as possible, diversify, build your portfolio up. It's not going to make you wealthy, but it'll make you some sort of money.
Yeah. I think like you said, if you invest like 50 Rand every single month into
Yeah.
an ETF, I think it makes a difference in the long run. My biggest regret is when I was 20, I was like, my friend told me to put money into like the S&P. I was like, nah, like it's fine. Like I'll try and make money and like 12% is too less. And now looking back, I was like, no, like you made a huge mistake. So like I tell my younger cousins, people that are coming out of school, like put money into the stock market. Like just average in, put money into the JSE top 40, put money into the S&P 500 because in the long run, you could use the money like
Yeah.
7 years down the line and like buy something or whatever or keep it. But you're missing out on a big opportunity by not doing so. Um, so I have a question, right? So would you rather have 10 million rand tomorrow or would you rather have 100K a month for life?
Sure. I think that's a tough one.
It is a tough one because then you have factors of like your how long would you live? And then you also have
Yeah,
external factors of like how do you manage your wealth? Are you managing well or whatever? So it's a individual question to you because it's like
correct. I
because
think that's a tough one. If you invest 10 million today, it can cash flow a decent amount of money, but
mm,
I'll take 100K a month for life. Um, but then you've got to factor in inflation. How much is 100K going to be worth 20 years from now, 30 years from now? It's completely different ballgame. But why I take 100K a month for life is because we can turn that 100K into 200K a month,
yeah.
right? On top of that, into your cash flowing investments will be worth way more than 10 million in a few years if you do it right,
Mm,
right? Because the one thing that I've learned about wealthy individuals is they want consistent cash flow,
yes.
but they also want recurring residual income,
Yes.
money that they don't have to work for. They don't have to, specifically trade time for money,
Mm,
and they want that money to come in, cash flow, and do it, do something else with it.
mm,
10 million once off, yes, it can change your life. You can put it in a fund, it'll grow, you can draw from it. But that's pretty much like quarter of like semi-retirement,
yeah.
if you like to call it. But 100K a month for the rest of your life, right? You're looking at an opportunity every month to try something new to
Exactly.
make you way more than 10 million rand once off. If someone comes to you and gives you, say, hey, here's 100K every month, try a new business out, try a new stock out. You know in the next month, the 100K is coming back, you
100%.
know?
Yeah.
So give me 10 million and I get it completely wrong. I buy the wrong crypto. It goes to zero.
Yeah.
You lose the whole thing. But recurring cash flow, that is king.
Yes. No,
Yeah.
that's um valid advice. Valid advice. So guys, if someone comes to you and offers you 10 million or 100K a month, you know what to do. 100%.
Indeed. Hope someone does.
You never know. You have a South African Mr. Beast coming to you and giving you.
I just
Uh,
removed that.
so we do the segment on the channel. We have quick fire questions, right? So basically, it's asking you 10 questions and you give us a quick answer for it. Um, cool. So first question is, what's the most financially irresponsible thing you've ever done?
Bought a car cash. Brand new car cash.
Brand new car cash. Okay, okay.
Right? Not a
Uh,
car cash.
Second one, crypto is a smart investment or modern day casino?
Smartest investment you'll make.
Nice. Have you ever bought into the hype train and lost money?
Yes. Meme
What?
coins, NFTs, all of that.
Uh, what's one financial creator you secretly think is all cap?
Not gonna answer that.
Valid, valid. Most underrated financial advice.
Don't get into debt early in life and live below your means. Do not get caught up in lifestyle creep and social media pressure.
Hmm, valid. If you had to delete one platform tomorrow, Instagram or TikTok or YouTube, let's add YouTube.
I delete TikTok live.
TikTok Live, some crazy
Yeah,
stuff on TikTok Live.
exactly. It's toxic and you should not be watching it. It's
People
just
people are fighting on TikTok Lives.
delete the platform.
Valid. Uh, which one do you trust more, a financial advisor or ChatGPT?
ChatGPT.
Okay. Okay. Um, okay, two options, right? So either the worst DM you ever received or the best the DM you've received. You can tell me either one.
Worst DM, I don't receive bad DMs, eh?
Yeah.
I receive hate on video like comments and stuff. Like some people are crazy, but not really. They don't have, I would say, the balls to actually DM me
Yeah.
and say what they need. But I think the best DM was maybe just getting someone out of debt,
Hmm.
right? Just from content creation,
Yeah.
right? Getting them out of debt, helping them realize that they need to become financially aware and they started investing and their portfolio's up like 30% for the entire year. So something like that, I've received so many of those, and
Mhm.
that's why you keep doing what you're doing.
Mhm. Yeah,
So yeah.
100%. Um, if you were to wake up tomorrow, and your followers are gone, right? What would you do? And then I think hide to that, your portfolio is the zero. What would you do?
Cry. Cry with my I won't cry if my followers are gone. I don't do this for followers.
Yes.
I'd redo it again. I'd do it again. I'd start
Yeah.
all over
Yeah.
um and build my social media again. But if my investments go to zero, I'd
Yeah,
cry.
that would be sad. That would be really sad.
Yeah. But again, start again, do the disciplines, and yeah, do it all over again.
Nice. Cool. So that's been the segment of quick fire questions. Um, yeah. Thanks. Thanks for your honesty. I appreciate it. You said you prefer advice from ChatGPT than a financial advisor. Why?
So financial advisor is specifically biased
Mm,
towards where their commission is driven,
right.
right? So, for example, yeah, and yes, they might have access to a lot of platforms that you can invest into, but it might not be the best one for you. It'll
Mm,
be the best one that they have access to. Call
right.
it Sanlam, Discovery, or Mutual, whatever. If they have access to all of those, they will only give you advice on all of those,
Mm,
right? But now we change the narrative and be like, okay, cool. You can do a TFSA through 10x Investments, which is a different platform,
yeah.
but it requires no broker,
Right.
right? It's an investment platform in terms of like it's for the specific investor that can go there and be like, hey, I want to go there. There's no broker fees. Instead of paying the 3% broker fee, it's 0.3%.
Mm,
It's just an ad. So you look at it like that, they're not going to put you in that direction. So that in specific platform wise, I'd say you've got to make your own decision.
yeah.
But also in understanding how to allocate your portfolio, where to do it. Sometimes you're completely out of your depth, right? As a human being, and you don't have the financial literacy, and that's where they come in,
Mm,
right? And that's how a financial advisor comes in. But ChatGPT can literally give you some world-class allocates. I'm not even kidding.
yeah.
Like
Yeah.
it can diversify your portfolio for you if you prompt it the right way.
Yes. Yeah.
Yeah.
Definitely. I think with ChatGPT or any AI platform, it's your prompts. If you get your prompts right, you could go to a different level. Yeah, and I think
100%.
yeah, there are financial advisors out there that are decent and good and not
Oh,
by
yeah.
commission. But there are very much people that are like,
But I think that's the stigma attached around it,
mm,
And I think those that are doing really good work, the ones that are doing good work will get rewarded for it
mm,
because nowadays people actually can see through people and be like, they're just pushing a product on me. They're pushing me to do a specific product,
yes,
get the comment. And they're not really relationship building anymore, eh? So I think that's a huge factor.
yeah, and some products don't even make sense, but they just push it.
Absolutely.
Coming back to the educational side of finance, right? And I think we've all been in school, but we never really learned finance. And I think there's certain things that we obviously would have loved to learn, but haven't. What would one financial lesson you think schools should have taught us, but didn't?
Tax, undoubtedly.
Yeah.
Tax be taught in school, not just for accounting students. Tax should be like some sort of mandatory subject in matric, which should be taught in the
Yes.
curriculum. So, I have so many like messages where, and it's not due to anyone's fault because no one teaches you this,
Yes.
right? And it should be taught in the system. 21-year-olds, 22-year-olds, 25-year-olds, they don't even understand the pay slip. They don't understand how it works. They don't understand why they're getting taxed, where the tax goes, how the tax is calculated, how they can benefit from the system itself. So I think for me personally, if I was to change something, add something into the school system, and it should be for everyone,
Yes.
be a tax module.
Yeah. Well, that's valid
Yeah.
because when I was coming out of school, I was like, I have no clue. Like I needed to ask like my friends that's in the financial space at that time. Of like, What
Yeah,
do I
and I mean, if you don't have friends in the financial space, who do you ask?
Yes, that's the thing. And that's the thing. And people don't really have that network. Not a lot of people have that network or could ask
And
people.
if you get the wrong advice from, like, let's say your friend,
Mm.
oh my word, right? They say, I don't pay your taxes or something crazy,
Yeah.
Like,
How's is on
then you
your
like,
how's is there?
they're there.
They don't
Trust me, they're watching you. They've got your bank statement on their system, loaded, waiting for you.
yeah.
So
Definitely I do believe tax is a big part of it. Um do you think South Africa is a good place to invest in to build a brand, to build example, or to build long-term wealth, or are you looking to build abroad? What's your take?
I love South Africa.
Mm,
Like, in terms of a place to build wealth, and if you earn a significant amount of money, you can live like a king in South Africa versus Dubai, USA, the UK,
yes.
if you earn a decent amount of money, right? You just look at how people live off, let's call it 500,000 Rand a month. You
Mm,
can live really well here in South Africa.
mm,
Okay. You take that and you shift it to Dubai. I don't think you'll live that fancy,
yeah.
compared to South Africa.
Yeah.
So you've also got to weigh out the options. Yes, safety in Dubai and safety in certain parts of the world is completely different, right? But we're just talking specifically money for money and what you
Exactly.
get.
Yeah.
But in terms of like investing and inflation and political stuff, South Africa is still great. The challenge we always had access to is the global tools. So you can be a hybrid strategist if you want
Yeah.
to. Me, myself personally, like for example, my TFSA, it has access to, or I invest into the MSCI World Index.
Mm,
So yes, I'm South African. I'm investing in the South African market, but some of my investments are in global funds, right? They just it's mandatory. You shouldn't risk all your money in just one economy.
mm. No, I think
Mm.
definitely. Um, Based on that, I think there's one more question because we didn't delve into that a bit. Like, what's your take on crypto? Because you kind of mentioned that you like great investment in the quick fire, right? So quickly, you said crypto great investment. So what's your take on crypto? Do you see it longevity? Where do you see it? Let's say example Bitcoin. Where do you see Bitcoin, or what's your major crypto that you looking at?
Crypto, I've been in crypto since 2016 or
Okay, good
2015,
time.
2016. Okay. So I've been through the cycles, up and down cycles. I've been through the absolute euphoria periods, and I've been through the market crashes. So that's all normal. In crypto, that's completely normal, right? We slowly adopting into the mainstream world now. So more and more companies are getting involved in crypto because AI has come into play. The blockchain payment solutions have come way more prevalent into society now. So you can utilize that. Where I see crypto or how I buy crypto, I literally buy crypto like I buy my investments,
Mm,
right? Dollar cost average into crypto, and it's
yeah.
never stopped, right? It's never stopped. It's just purely because I believe if you look at the trend and you look at the track record of cryptocurrency, where Bitcoin was, and every year $5,000, $10,000,
Yeah.
$20,000, $50,000, now sitting at about $110,000.
Mm,
Yes, it goes $50,000 back down to 20 and then up to 70 and then down to 50 and then up to 90. But over time, that chart goes in one direction, right?
exactly.
On the macro scale, on the big term,
Yeah.
it goes up in one direction. So if you look at it like that, and that's what it's done for the last 10 years, I'm just talking specifically Bitcoin, it's projected to do 150,000, 250,000, 350,000, but it's not in this cycle, right? It's not this cycle. It's maybe
Yes.
in a few cycles now. So how do you get involved in it? You just completely remove emotion and just buy every single month if you want to into it and hold it for the long term,
Yeah.
right? Um, you've also got to understand that cryptocurrency is everything except for Bitcoin is a company,
Mm,
right? Ethereum is a company, Solana is a company,
yeah.
Polkadot's a company, Chainlink is a company. These are companies, right? Bitcoin is not a company.
Mm.
No one owns Bitcoin. It's mined, right? But these companies like Ethereum, Solana, etc., they are controlled by CEOs and by a board of directors, and they have a coin price, which is a share price
Mhm.
of the actual company,
Okay.
right? So you've got to look at it like that in terms of who owns the stock, who owns the crypto in
Mm.
terms of the company. But Bitcoin, probably no, like nobody else. No one knows who owns Bitcoin in
Yeah.
terms of who's the creator of Bitcoin. But, and for me personally, that is how I look at it and be like, okay, if I'm going to allocate my portfolio, and if you should look at something like Easy Equities has a crypto fund,
Yeah.
right? Or the EC10 crypto fund. And you just weight it based on market cap, right? And if you buy into the crypto fund every single month, if you don't know which cryptos to buy, this is for someone that has no idea what crypto to buy. So if
Mm.
you just buy into the crypto fund every single month, dollar cost average into it, rand cost average into it, and you'll just build a nice portfolio.
Mm.
And you have some sort of diversity. Remember, I said 15% of the 15%, maybe 5% goes in something a little bit riskier.
Yeah.
Cool. That 5% can be allocated to the EC10 fund and
Mm.
then grow from there.
Yeah, I think that's solid advice. I appreciate the background as well. For being in Bitcoin for 9 years or crypto in 9 years is a lot. I've only been in crypto from I mean, my dad was exposed to it around that time, but I only got into it maybe like 2021 properly and made some money, lost some money, but got into it and then learned it. And the thing is like it got me into it and I never went away from it. So it was like now you're forced to learn about it. And I think that's the thing is that get into it and then learn about it. But obviously don't put your life savings into it. Put money that you're willing to risk,
Yeah.
which is the main.
100%.
Yeah. Um, yeah, I think to wrap up, what is the future? What's the next 3 to 5 years for you or for your business? Where do you see yourself there?
For me, myself, so even in the social media space, I didn't start this out for like a monetary value
Yeah, yeah,
reason
yeah.
or anything. I just want to impact the youth to the entrepreneur, to the family member,
Mm,
or to the family that has absolutely no financial background. Like in terms of financial literacy, just be the heart of the consumer and be what people want to consume specifically.
yeah,
And it's a huge responsibility in terms of that because people really and truly look to you for sound advice
yeah.
in terms of what you're telling them. And I keep saying that I'm not a financial advisor. I don't
Mm,
give financial advice.
yeah.
What I say to you is how to actually, live within certain parameters and create these habits and be financially literate, right? So I think that to me is probably the next 3 to 5 year game plan is just build the platforms bigger. And it's not really bigger, it's just more impact,
Hmm.
right? In terms of if even if my follow account stays exactly the same, I'm happy. That's fine. You
Yes.
know, that's people really don't understand. 1,000 followers is a lot. Like you stand in front of a crowd of 1,000 people, trust me, you won't be able to talk because you'll have stage fright. Now
Exactly.
you put 10,000 followers, 50,000, 100,000. You keep chasing these numbers and they're not really meaning anything, right? But just to impact more, I think 20 between the age of 20 and 30 I think I lost you there.
Hello?
How's it?
Sorry, sir. I don't know what happened there. Can you hear me now?
Yeah, would you like you freezing and then it's coming in. I don't know what you're
Yeah.
doing.
Is it still freezing like it? Or
Yeah, you're still frozen. On my side, you're frozen. I can hear your voice, but you're frozen.
Oh, not sure what happened. I think the Wi-Fi was bugging. Um,
No, it's fine.
can you see me now?
Yeah, no, it's fine.
Okay,
Looks good.
cool.
Back
Um,
to normal. I don't
yeah.
know where I stopped or where you heard me last or
Um,
how
it,
is the recording carry on though.
it should I can cut it from a certain point of where you were answering, so I can merge it. Um, I think you were more wrapping up on. So you said you spoke after. It's not about the numbers. It's not about. You said 1,000 people. It's a lot of people, and then you went
Yeah.
into impacting more people. So along those lines, and I think you could. Um,
Yeah, it's just like I want financial literacy to be the hub of my content and how it can impact families. But I said I want to focus on your 20-year-olds, 35-year-olds specifically, and help them actually change the mindset towards, hey, you don't understand. And I say this because, and yes, I'm like mid-30s myself. So you're probably like, who's this guy giving us advice? I have clients that are in their 50s, in their 60s, and I see it firsthand, and I'm like, whoa, we need to change this in your 20s in order
yeah,
for us to get to a better position in our 50s. So that's where I get my kind of insight from. It's not from just thumb sucking it from the air,
yeah,
right? I've seen wealthy individuals that make millions and millions of rands in investments every year. And I know, okay, this is how they did it. This is the places they've put their money in. Let's do the exact same thing. The blueprint
mm,
is there. So why not
100%.
just give the 20-year-olds and 35-year-olds, hey, this is a blueprint how someone in their 50s now has 50 million rand, in investments,
Yeah.
and they live off the money comfortably, very comfortably. This is the blueprint to it. Do the exact same thing. And people kind of don't understand that's where I get the insight from. It's from
Mm.
experience and day-to-day living and clients and all of that stuff. But yeah, that's completely off topic. But anyway, so
Oh, it's the topic. It's
that's
aligned with what you want to do. Yeah.
yeah, exactly. And that is where that's what I want to do is just impact your entrepreneurs, your small business owners. Because I think small business owners, they're huge in the economy here. Like they're huge, they're massive. They contribute a significant portion of it, of the economy that people don't really understand. And they need more support in terms of not only funding, but in terms of like tools and support, etc., as well, like revenue driven support. So I think they also a crux to my content is how I can help the small business owner just become a little bit better, help their business grow and become bigger so they can just if they want to sell off, and if they want to just, carry on and grow to become a listed company. But also with business, just next 3 to 5 years, just expand, help more people.
Yeah.
I'm in a really good space. I'm blessed to be in that
Mm.
space and help so many people.
Yeah. Yeah, I think thank you so much again for just being on the podcast. But then, again, thank you so much for then making an impact on people's lives because I'm sure there's people that reach out to be like, thank you, got me out of debt, or you helped me save up towards something. And I think in that aspect, there's not a lot of people that are doing it. And if there are people doing it, it's for selfish gain of trying to, build their own following,
Yeah,
whatever. So, uh, appreciate you doing it because I think South Africa needs it and it's going to make an impact on the long run. And we want to make impact in South Africa. So, thank you so much for doing that. And thank you for being on the podcast. I'm sure this would help a lot of people with the advice that you gave. Um, I'll also take from it and put money into the SB, the JSC Top 40, and that type of stuff. So appreciate your time. Guys, make sure you follow him on all platforms. These links will be in the description. Um, anything else you want to shout out that people should
no,
follow?
just thank you, man. Thank you for getting me on your podcast and being able to share my journey and share the knowledge that we have. Yeah, appreciate it.
Yeah, thanks also for responding. I think, yeah, to do that and to be on. Um,
No problem.
yeah.
Again, we don't do this for monetary reasons.
Yeah, yeah, exactly. Cool. Thank you so much,
Yeah.
Davron. Guys, make sure you like, you subscribe, follow Davron on all his platforms. Thanks for watching. Peace.